K. Harihar, Treasurer with First Rand Bank, joins us live from Mumbai. Harihar, morning. Thank you for joining us. Harihar, Reserve Bank of India has intervened. They have intervened last week and they are planning to intervene this week as well. But do you think whatever measures Reserve Bank of India is doing, they are too late, too little, and they will do very little to defend a broken down currency?
Not really. I think if you look at the overall piece, I think you're fighting fundamentals and you're fighting sentiment. The fundamentals always in the forex market have not been as bad, or rather they've not deteriorated in the last few months very badly. If at all you have a current account deficit which has slipped from about 185 billion US dollars to maybe about about 150. That's been the range that the current account deficit has happened. We just had a news release that the FDI for the last year ending March 2012 was $50 billion. But when the sentiment goes bad, what happens is the importers end up in the market and the exporters stay away from the market. And that's been the kind of market that we've been facing. But looking at, I would say that today is a big day because the G8 has made extremely positive comments on the Eurozone, almost making it, mandatory that Greece should be bailed out. Now, the how is going to be much more complicated than the intention. But that's made the euro go up and that's made the dollar go down against the euro. That's positive. The global stock markets look very, very strong. Commodities are looking very weak. Now, that should add up to a lot of benefits for India in terms of the current account deficit. You also have gold kind of stagnating in the international markets. So irrespective of whether the customs duty is going to go up or go down, you're going to have the purchasing of gold kind of backing off, and we've already seen the evidence of that in the last 2 months. Now, this is the ideal kind of situation where if the RBI intervenes in the market and dumps dollars in the marketplace, very few guys would want to go on the opposite side and go long dollars. Now, they've also last week as well as this week, they made sure that the ammunition for that is there in terms of making sure that liquidity is there in the marketplace. So last time they did an OMO of about 12,000 crores. This time they've stated an intention that they'll continue to do the OMOs. Now that will make sure that even if they dump dollars on the spot market, it's going to be, the liquidity of that can be very easily done. But critically, we spoke last time that the currency futures market has slowly become a larger animal than the OTC market, with daily volumes clearly being a multiple of the volumes that you see in the OTC market. Now that's a market where you don't need any paperwork, you don't need import documents, export documents. So it's very nice that they've started controlling that market, because intraday that market is a classic case of the tail wagging the dog, and the more you control that market. But having said that, it's a lovely move, but today is a classic day where if they intervene, I think you can see the rupee going left. Having said that, you mentioned earlier, can the fundamentals dramatically change just because you've done a few measures? Not really. For the fundamentals to change, you also need the exporters coming back in a big way. You may see the FIs coming back also, because there is now open talk that the petrol and the diesel price hikes may actually be affected in a couple of days, which can work miracles for the fiscal deficit and can again show the country in a positive light. So putting all in a package, I think I'm seeing much more positivity today, and if there is follow through, then I think the rupee may at least stabilize at current levels, which will get the exporters into the market to dump their dollars.
Right. So, Hari, after a breach of 55, given all the parameters that you just talked about, if things remain status quo and we don't have RBI intervention today, what levels can we see on the INR in the near term?
Well, since it's in an overshoot territory, I think the market's mentally sensitizing itself to possibly even seeing a 56, because importers are covering whatever they have, at least in the first 2 months, so which is why you see the forwards being elevated for the first 1 to 3 months, though not for the far forwards. And the exporters clearly are staying away, because you see enough reports that rupee may go to 57, rupee may go to 60. Now, if you're a classic exporter, you wouldn't want to give away all your dollars at lower levels. So it's a classic case of demand-supply imbalance. So given that backdrop, you could see exporters still only marginally offering their dollars, and that could lead to probably even a test of 56, but much more slowly and not dramatically as it's been there in the last few days.